गुड इवनिंग 4th ऑफ जुलाई। मैं हूं आपका होस्ट नरेंद्र और आज के वीडियो का हमारा टॉपिक है 5 पॉइंट्स बिफोर यू start investing in any growth investing small case. And first of all, let me thank you for an extreme or a beautiful news which my team shared with me, that when you go to Smallcase app and in trending small cases and you navigate to the most invested new, out of these 10 slots, 5 slots are being given to growth investing small cases, and that's an amazing news, I would say. That's a beautiful news, I would say. And my team told me that yes, they had been trending for quite some time, but today I was able to see it, and that's what one of the point is, to say a big thank you to all of you for appreciating us, for sharing your love and support to our small cases, subscribing to our small cases. That's been a real good day or a good news, you can say, to me personally, and my team is also, they are overjoyed with this. Now continuing with our video. So this time I had tried to keep everything into the script and not to stray around here and there. So 5 points we're gonna discuss, and why 5 points means that makes a lot of sense to consider these basic principles, 5 principles, while investing in growth investing small cases. One of them is expectation. First point is expectation. Please do have a realistic expectation with the small case you are investing, or any other investing asset class you are investing. Have a realistic expectation. Why? First, I would say, keep in mind, just write on in your mind or in your diary or somewhere where you keep notes, that I am investing in this small case. I need this much of returns. Don't look at the current returns. Have your own level of where you feel satisfied. Okay, this much is enough for me, and if this continues for longer terms, that solves my purpose. कोई रिटर्न्स का अंत नहीं है. There is no end to return. For someone 12% is enough, for someone 20% is enough, for someone 30% is enough. What I meant is, for a long term, please do keep a realistic expectation and write it, and do write it before you think or before you plan investing in any specific small case of growth investing. Why it is important? Because there are two important things. One is your small case needs your time and patience. Means your money needs your time and patience to grow. As we plant a tree from a seedling to a full grown up tree and to the fruit it gives to us, bare minimum 4, 5, 6 years to 10 years generally is the time period. That's the same with money. And second is, since we have got ICC 20 World Cup, I would say more time you spend on pitch, more time our players spend on pitch, it is most likely that he will score more runs. Whether it is Dravid or god of cricket called Sachin, it happens, and it will continue to happen. Similar is with money. More time you stay with a small case, more time you stay with your own thesis of investing, you will make much better output than the rest of others. Second is, now you are investing. I'm talking generally, these are the questions which I received, so that's why I have compiled these in 5 major headers. Second is capital deployment. Say today you have subscribed to any of the small cases of growth investing. For example, GI Mid Cap Growth Champions, okay? And you want to start with initial amount of 4 lakhs. That's right. So what I meant here is how you deploy your capital in the beginning. That's a most crucial part. I would always recommend, and I had been recommending this, split your 4 lakhs or your initial capital or your starting money in 4 equal parts. 4 equal parts. I will also share the logic why. And assuming today you have subscribed to this small case and you have invested, you want to invest, then invest your first part, which is 1 lakh. So we call this as T plus 0 day. T means today is a 0th day. Now market is at 24,300 or 350 somewhere. Maybe down the line market goes to 24,500 or 24,600 somewhere. And you see, okay, market is going up. Am I underinvested? No, that's not the point. That's not the way you should think of. You should think of, fine, I have split my initial money in 4 equal parts, and I will deploy this money in a span of 45 to 60 days. So first is T plus 0, 1 lakh. Then after 15 days, I will look at it. Either the market is at below this current level or it's higher, then I will deploy. If it is below, good. If it is the same level, again good, no worries. Intent of deploying it at every 15 days or every 12 days or every 20 days, idea is to keep the investment averaged. because in 60 days market will go up and market will also come down. So your investment would be averaged, and this is a very good psychological boost when you see your portfolio always in green to begin with. Okay, so critical point is split your capital in 4 parts. T plus 0 is today, invest 1 part, take another 3 parts gradually over a period of time. Third part, settling time. This is again critical and important. I generally keep settling time for 3 months. Why? And I should also explain it. Settling time is, it's like once you start playing any new match or a new hobby or something like this, you need time to understand how the game is played, how the bat is being, how to hold a bat or how to hold a racket. If you are planning badminton or table tennis or lawn tennis or any other game or any other sports where you try and learn basics. So this 3 months time is the net practice time for your portfolio. I would say allow it 3 months. Ideal is 6 months. 3 months means why? Because today you are entering in your portfolio for the first time, subscribing to a Smallcase. There are some 10 stocks in it. Maybe once we go for a rebalance, 2 might go out and 2 new might come in. So these balance 8 are, they are old horses. They are running along with us. Maybe they are running for 10 months, 8 months, 6 months. You never know. Many times, those are the stocks which we call the M bagger or the multi-bagger. They continue to perform in your portfolio, but there are certain stocks which get tired over a period of time. Post running for 3 months, 6 months, they get tired. So it means there is a time for a new fresh blood to come into your small case, and that's where the tired stocks or the stocks which are not performing will go out and the fresh blood will come in. And this generally takes a time of 3 to 6 months. But generally it is all about the bottom 4 or bottom 5, not the best performers, because they continue even for 3 years continuously in a portfolio. And typically in large cap it happens. Mid cap, yes, I can see it happens. But whenever index changes, certain changes are there. So settling time is bare minimum 3 months. Have that kind of a patience. Don't look at your portfolio every week or every day and see what has happened. Allow the portfolio to settle according to you. After 6 months, some new investor will come in, same thing will happen to him. So this is a process, this is a continuous process. Allow it to happen. This is the way M baggers, multi-baggers will continue in your portfolio. Trust me, that's gonna happen and surely it will happen. Fourth is handling negative returns. How would you handle negative returns initially? Most critical and underlying point is how will you handle negative returns? See, on small cases, you are trying DIY, you are selecting 10 small cases, shortlisting 2 or 3 and then finally choosing one. Now, assuming, a classical example is assuming today market it as 20,400, right? And a new investor join in, subscribe to a growth investing small case and invest today. It's either God knows or the market maker knows that the market tomorrow will correct or not. If not, good, great. Let the bull run continue. And if it correct means those healthy correction. I'm not saying some 2020 kind of a correction or 2008 kind of a correction where the market certainly goes to half. But yes, once we see that if the market corrects, how will this guy handle as the negative returns on day 0? Because it also happens with me. Let me clarify. Whenever I invest, it also happens with me. Investment brings in first 1, 2 or 3 days, it is negative returns. Okay. How to handle it? You handle it because then you have invested only one part of it. When the market corrects, you gradually wait for it to correct fully and apply your second part. So another point here I would highlight is market corrects for a day and new investors, newbies suddenly start writing a WhatsApp or email and say, sir, should I invest? No, allow market to correct. If the market correct for 3 days, then you put your second tranche or the second equal part of that. Ideally 3 days, 500, 600 points, 3%, 4% is generally the correction. These days it is happening. And if the market corrects by 5%, then put on the third amount. If the market corrects further 2%, put on your last amount and then you are fully deployed. Don't worry. In a macro story of India is fully intact. We will continue to grow. The bull run is here to stay. Minor technical correction here and there will come, so those should not bother you. So applying your initial money in 4 part will always help you. Always keeping some part for to deploy while correction happens will always help you, generating better returns, because at bottom point of it you do it. A classical example is 12:30 on 4th of June. Those investors who has deployed money at that time could now see the impact in their portfolio. That's what I meant. And last point is when to invest more. So there are two ways. I would like to deal it with a framework. You do a monthly SIP, post rebalancing, fix a amount, fix a date, follow it. Do not worry about anything. Do not worry at all. This is the best mechanism you can have. Need not to worry about market condition, need not to worry about market whether it's in downturn or uptrend, because market if is in downtrend will also be in uptrend. If market is in uptrend, remember market will also correct. All right. And second way is I also want to add some money when the market corrects to certain point. Means market corrects 3%, 4%, 5%. I will add. How will you understand market has corrected? You look at your portfolio and then you do it. How will you define when to invest more? You can define invest more in two bases, 2 points, two ways of doing it, I would say. One is you do a monthly SIP, systematic investment plan, on post rebalance every month without considering what the market is saying and how the market is behaving. This is one of the best ways to do it. Trust me, guys, best peace of mind you can have with this model, with this thought. Second is, I also want to put some money when the market corrects. That accordingly gradually will happen over a period of time. You will have some money, market corrects, you deploy that money. This is another way of doing it. Third is, I will only put money when the market corrects. Yes, very well. That's also a good thought, but not as good as the monthly kind of plan. So here you have to wait even for 3 months, 6 months, sometimes even for a year to deploy money. That is up to you. I leave it up to you. So more or less, I have tried to explain you why 5 points are very critical while investing in growth investing small cases. If you do not understand the video, look at this video or watch it again. Watch it on audio mode only. Things will happen. You will understand it. Specifically, it is applicable to a newbie, to the one who's selecting, or to the one who's professional kind of investor. Things will happen this way only with the market, even today, 5 years down the line or 10 years down the line. All right. And thank you so much for keeping your loved growth investing small cases in the most invested new trending. I'm amazed. 5 positions out of 10 slots belongs to us. And it is not we, it is you who has given us so much of respect, trust, and your confidence straight away looks into, is translated into the numbers and the most trending. Please do share this with your friends, family, your investing buddies, or someone who's struggling how to, consistently create money. And yes, please do subscribe. Thank you so much. Bye-bye. Thanks for the day. That's all for the day.